5 EMA Intraday Strategy, simple and effective. This presentation introduces a straightforward intraday trading strategy. It uses the 5-period exponential moving average, EMA. It's a quick, responsive approach to capture short-term price movements. Understanding exponential moving averages, EMA versus SMA. EMA weights recent prices, reacting faster than simple moving average, SMA. 5-period sensitivity. The 5-period EMA is highly sensitive to immediate price changes, generating timely signals. Calculation impact. Current day's price impacts the EMA more significantly, reflecting recent activity. EMAs give more weight to recent prices than older prices. The 5 EMA strategy, core principles, entry signal, price crosses above or below the 5 EMA, indicating a potential trend change. Volume confirmation. A volume surge should accompany the cross, confirming the strength of the move. Time frames. Primarily use 1-minute, 3-minute or 5-minute charts for quick decision-making. Long entry. Setup, price action. Price trades below the 5 EMA, then crosses above, signaling potential upside. Volume confirmation. Volume increases significantly during the upward cross, validating the bullish move. Entry point. Enter a long position near the close of the confirming candle for optimal timing. Short entry. Setup. Price action. Price trades above the 5 EMA, then crosses below, indicating potential downside. Volume confirmation. Volume increases significantly during the downward cross, confirming bearish momentum. Entry point. Enter a short position near the close of the confirming candle for timely execution. Stop loss and take profit levels. Stop loss. Place it just below the low of the entry candle, long, or above the high, short. Take profit. Aim for 1.5x to 2x the risk, calculated from entry to stop loss. Trailing stop. Maximize profits by using a trailing stop to follow the price movement. Risk management and considerations. Capital allocation. Trade with a small percentage of your capital, ideally 1 to 2% per trade, to limit losses. News avoidance. Avoid trading during major news announcements that can cause unpredictable volatility. Backtesting. Thoroughly backtest the strategy on historical data to assess its effectiveness. Strategy summary. Implementation. Easy to implement, but requires discipline and adherence to rules. Asset suitability. Best suited for liquid stocks or assets with consistent price action. Additional indicators. Enhance accuracy by combining with other indicators like RSI or MACD. This strategy is best suited for liquid stocks.